You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.CFRN.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.CFRN.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Tuesday, 8th day of September 2020. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Can't see the screen I have up? Go to our homepage at CFRN.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from the desktop, not to worry, point any internet connected browser to CFRN.net/live. There you'll find a live real-time simulcast of the show as it unfolds. Unfortunately, you just won't have access to the chat box. Now, we also stream live on Facebook, YouTube, and Twitter during this 2-hour broadcast. And of course, we're still streaming the gospel to the four corners of the universe on CFRN radio since April of 2005. Well, let's open up with a word of prayer. Heavenly Father, we thank you for all your blessings, for your mercy, for your grace. God, I pray today for your emotional, physical, and spiritual protection over every member of this audience. I pray, God, that you would keep evil far from them. Help them to trust you as their refuge and strength. I pray, God, you will guard their minds from harmful instruction and grant them discernment to recognize truth, the real truth, the true truth. I pray that you'll make them strong and courageous in the presence of danger, recognizing that you have overcome and will set right all injustice and wrong that one day. Help them to find rest in your shadow as they live in the spiritual shelter you provide for them. Let them know that the only safe place is in Jesus, and that their home on earth here, well, we're just all passing through. But help us to make this a better place when we leave it than it was when we found it. In Jesus' name, amen. Amen. Okay, happy Tuesday. All right, we got a big drop in the markets last night. Typically, we rally into holiday weekends, Labor Day being one of those. This week, that's just not how it turned out. Now, last week 109 of Logic 247, we had a total of 62 alerts. 54 were actionable. 4 of them were stopped out based on not risking more than $300 per contract per trade, less when possible, based on the 3-step methodology that I teach all of our traders about market structure. So that represents 7% of actionable alerts stopped out. Now that was last week. This week, as with many holiday weeks, a little bumpy road there. We've issued a total of 18 alerts, 3 never triggered. That left us 15 actionable alerts. 3 of those have been stopped out, so that's 27% of actionable alerts. So that's not a typical number, and that's not a typical number. A typical number is 20% is what we've averaged. As you see, as we scroll back through last week, we had a day with 7%, 7, and those are cumulative for the week. And then we get all the way back to, let's see, week 109, where we had our week 108, right? Week 108, we had 55 alerts, 48 actionable. 4 of those stopped out, 8%. So that's a weekly total, but not the average. The average, 20%. Okay? So, with that said, let me give you the numbers from around the world real quick, and then Michael can give us a recap of what happened this morning in the live trading room. Starting here in the U.S., and here comes the data. Okay, the Dow is down 459 points, 1.5%. NASDAQ down 300, 2.5%. S&P 500 down 67, 2%. And the Russell 2000 down 27, 1.75%. In the commodity basket, crude oil down $3.33. That's a drop of a little over 8%. Crude trading 36.44 last. Gold up $1, trading 19.35.30 last. Silver down 8 cents, trading 26.63 last. And in the Asian markets at the close, Nikkei posted a gain of 184 points. The Shanghai gained 23. The Hang Seng gained 35. And in the European markets at the close, FTSE down 7. DAX down 131. CAC down 80. So for the DAX, that's a drop on the session of 1%. For the CAC, it's a drop of 1.5%. That's going to give us a green day in Asia, a red day in the UK. It's definitely a big red Radio Tuesday here in the US of A. Michael, if you're ready, you're welcome to take it away.
Michael is ready. Okay.
Someone mentioned to me that on Friday, for some reason, they weren't able to see your charts. They could hear you, but they couldn't see your charts. So I'm curious, did you do anything at all different on your end?
No.
Okay, to my knowledge, I did nothing different on my end. So let me use my phone real quick here and punch up our YouTube page where it says live. Your charts. They could hear you, but couldn't see your charts. Okay. I'm curious, did you do anything at all? I'm catching up to the part now where, okay, I see your charts right now. Yeah, I'm seeing them via YouTube. So whatever the glitch was on Friday, apologize for that, guys, but seems to be working just fine today. Okay. So
okay.
It's all yours.
All right. Here we go. Good afternoon, everyone. And it was a very good morning. And there is so much to go over. I'm gonna go through just my trades, okay? I'm not going to go through every trade that's set up because there were just so many. There was so much opportunity today. It was our best day of the year today. Alright, so today is the 8th day of September, 2020. I gotta fix that. 8th day of September 2020. There we go. Okay. If you're going to read the spreadsheet, you got to read all the CFTC risk disclosures on the bottom. Today we made 26 ticks in crude, 28 ticks in gold, and 58 ticks on the ES. We did do stuff on the euro, but it was YBR trades, so I don't get to count that. Today it took 7 minutes and 1 trade to get to the goal for the day. At that point we're up $100 a contract. And we took a total of 12 trades. So on the month now we're at $4,365 a contract. That's over 5 trading days, averaging $873 per contract per 2-hour trading day. And I missed most of the trades. It's been 141 consecutive days that I've gotten my goal. And on the year now, we're at $67,821. That's over 166 trading days, averaging $408 per contract per 2-hour trading day. Now, if you're not part of the CFRN family, go to EminiFuturesTrading.com. Sorry, go to EminiFuturesTrading.com and become a part of the family. Alright, we've made it extremely easy to become part of the family. Alright, let's start out with gold. Now, I usually end with gold because it's usually our biggest winner lately. But today and Friday, the ES have outdone gold. Alright, here we go. Now, right at 9:30, well, in the pre-market, there was some movement on the downside right here. And once again, the high and low of the day, clearly not correct. The lines that show the high and low of the day. It's because they had to restart their servers. I don't know what time it was, but they had to restart their servers, and so everything was a restart from there. But right here, once we started the trend up, we had a long opportunity right there. Okay, and another one right there. And then it turned around. See, we had the YBR short right there. It was also a trendline trade from right there, but the YBR had it first. Then we moved along, and we had a shorting opportunity right here, but it was moving so fast that I ended up just getting my stop to break even in time. You know, the shorting opportunity was here, and then a couple seconds later, I had my stop at break even. Then it got kind of choppy, and it started moving up. Didn't really give any good long trade setups here. You know, really nothing really good on the long side. But our first trade was right here. We picked up 8 ticks. There was a trade here, trade here that we missed. And then on this one, we picked up a bunch on this one because we went from 8. Oh, no, I'm sorry. The first one was 4, and this one was 14. Okay, sorry, I was looking at the ES. This one was 14. Yeah, we got over here, and I wasn't really watching gold all that much. I actually stopped looking at other markets, and I just focused on the ES. But there was a long there, a long there, a long there. And then it turned around and started going short. And there was a short there, a short there, a short there. Then it turned back around and started going long. There, 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 and there. And I mean, the markets were all over the place today. When I started looking at the other markets again, when I saw the ES was getting choppy, and I started looking at the other markets again, I picked up 10 ticks right there to put us at plus 28 on the gold. And then got into the break. And there was some opportunity during the break, but it wasn't pretty. It wasn't easy. Okay. On the euro, I only did YBR trades on the euro today. So I don't have anything to show you really. It had some good trades. You know, it had some pretty good opportunity. The YBR is like right there. And right here. And right here. And right here. And that was pretty much it for the euro. On the crude today, we had some pretty good trades. During the break, there was a ton of opportunity. Sorry, I was just looking behind you, see who was making all that noise. Our first trade on crude, I didn't mark it, but we picked up 1 tick. It was right here. And the second trade, we picked up 19 to put us at plus 20. Now the YBR trades on crude. There was one right here to grab that huge move down. On this one, we picked up 6 ticks to put us at plus 26. I missed that one. Another YBR trade right here. Okay, another one right here. This was during the break. Okay, then crude just turned around and started going up. And if we look at this on the larger time frame, you see it's pulled all the way back to the BBC. That's where it is right now. Okay. Let me minimize that. Then we'll come to the ES. Now the ES was our big earner today. It was a wild ride. It really was. And let the data catch up. So even in the pre-market, you see we had red on the YBR, big down close, red on the YBR, blue on the YBR. Now, let's go to the open. Here it is, right here. Look at that, red on the YBR. That down close off the BBC. I missed that one, sadly. But I did grab this one right here. This is where we got the goal for the day. On the ES, I picked up 8 ticks on that. Red on the YBR with a down close. Blue on the YBR with an up close. I missed that one and that one. But I had a big win on this one. We picked up 26 ticks. No, 28 ticks on this trade right here. Put us at plus 36. And that was also blue on the YBR, bounce off the BBC. It had 128, 137. This had like all the trades mixed up, overlapping each other. So that was a great opportunity. Now, you only need one of these a day. Remember, one a day. Now, if you have 10 contracts on right there, $2,800 in that one move. All right, so red on the YBR with a down close. Nice move down right there. Now, my next trade was over here. And on this one, I only picked up 4 ticks because it was moving so fast. I locked in 4 ticks. That puts it plus 40. Now, you see the YBR trades. They were so much easier to do than the trendline trades because you don't have to draw a trend line. But there was one there, one there. One here. One here. One there, that would have been a break even. One here. Let's keep moving. Okay, so at that point we were at plus 40. Then I picked up 8 more ticks right here, put us at plus 48. That was using the trend line trade. Okay, and I missed a trade right there. I know there were some trend line trades right in here that I missed, but the market was moving around so fast. That was about when I started to just focus on the ES and not look at the other markets. But there was a long right here. Missed a trade there, missed a trade there. Missed a trade there, there, and there. And another one there. And another one there. We had, excuse me. I think at this point we're up 48 ticks. I don't know. Had a break even there. And a break even there. And we picked up 10 ticks here and put us at plus 58. Nope, I'm sorry. We picked up 8 ticks on this one to put us at plus 48. And we picked up 10 ticks on this one to put us at plus 58. And we missed a trade there and there. And, you know, the market was bouncing around so fast. There was a trade there. And then we got into the break. Now, the ES is trading so thin right now. You know, I got to the point where I was just worn out from trading it. So I was just telling everybody where I think it's going to go. Like right now, 33.65 on the upside, 33.61.25 on the downside. I'm not even looking at my charts. I'm just reading the DOM. And I'm still sticking to 33.65 on the upside. Now 33.62.25 on the downside. But you have to read the charts. Okay. I'll help guide you through the trade once you get into a trade. Once we have an actual trade setup. But we don't have a trade setup right now. We have blue on the YBR, but the slingshot's not letting us do anything. Okay. Now, what I've been doing lately is trying to guide everyone when you're in a trade. Like right now, if you look at the euro, I mean, the ES is trading so thin. It's trading about the same as the euro, and gold is trading so thin. But the euro right now, it actually wants to pull all the way back down to 965. The upside is 80.55. But I think what we're likely to see here on the euro is it's going to pull back down here. And no, that'll probably be where the YBR is at that time. It'll be pretty close to the YBR. And it'll give us a blue on the YBR. And then it'll jump back up to 80.55. It's not actually a low volume, Michael. It's here. I'll show you what I mean. See these numbers down here? They were normally like 5,000. But you see how low they are? That's what's making it bounce around the way that it's bouncing around. So right now, 61.25 is what I said, I think, right? And then on the upside, it's going to be 65. So that's what I'm talking about when I said it's trading so thin. When I say it's trading so thin. And if you look at gold, these numbers are normally 500, 600. Okay. Crude oil is kind of normal. They're a little bit higher normally, but it's pretty close to normal. And the euro is normal. Now, what did I say the euro was going to go down to? 9.55. Something like that. But it's going to bounce. I mean, you got to trade the charts that are in front of you. And, once I see a trade set up, I'll help you manage a trade. Okay, so you got to learn the trade setups, get into the trade, and then I'll help guide you through the trade. Okay. All right. So let's go back to the spreadsheet. We just hit what I said we were going to hit here on gold. Let's go back to the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 8th day of September 2020. Today made 26 ticks on crude, 28 ticks on gold, and 58 ticks on the ES. Put us at plus 1265 this morning per contract in 2 hours. And I missed most of the trades, as I just showed you. Hang on a second, Michael. Today took 7 minutes in one trade to get to the goal for the day. At that point, we were $100 contract, and we took a total of 12 trades. So on the month, we're at $4,365. That's over 5 trading days, averaging $873 per contract per 2-hour trading day. And again, I missed most of the trades. Today's my 141st consecutive day of getting the goal. And now we're at $67,821. That's over 166 days, averaging $408 per contract per trading day. These are unprecedented times, guys. I've never gone that many days in a row without having a down day. And it's just incredible. Okay. So, no, it's great, actually, Michael. It's great. The question was, so not good to trade low volume. Well, you can't trade a lot of contracts, but it's great trading. There's so much opportunity right now. And, you know, like right now, I mean, the ES is going to go up to 33.58. And, you know, we don't have a trade set up for it right now, but that's where it's going. And now we have right on the YBR, but we don't have the slingshot set up right. So you don't want to get involved with that. The euro is the only one that's kind of normal right now, and it's going to go up to 80.45. I don't like gold right here. We don't have a trade set up for it. And crude, we did have a trade set up on crude, but it would have been break even. And did we get up to where I said we were going to go? On the ES, we did, didn't we? And I don't know, on crude, I see it dropping down to 36.95. 36.95. And I don't know. Those are just my thoughts. All right, so with that, we can pass it back to Studio A in fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne is ready. There you go.
I'm ready. Recap of the recap.
Today it took 7 minutes and one trade to get to $100 a contract.
Good job.
Thank you.
Good job. All right, guys, we already took a peek. For some reason my headset doesn't sound quite right, but I guess it'll have to.
It sounds fine on this end.
Doesn't? Okay, well, that's all that matters.
Yeah. Yeah.
Okie doke.
Bronson, I'm going to create the link and send it to you right now. Okay.
Yeah, sometime this afternoon, Michael, text me when you got some free time. I need to have a little chat with you.
Okay.
All right, guys, week 108. 2 weeks ago, we ended up the week with 48 actionable and 8% stopped out, or 4, based on not risking more than $300 per contract per trade. And so then we ended last week, week 109, with the total of 62 issued, 54 actionable, 4 stopped out. That's 7% of actionable alerts. Here we are on a Tuesday after a holiday. We had just 18 alerts total. U.S. markets were closed yesterday. Holiday trades always a little slippery. So we have 15 actionable alerts, 3 were stopped out, and so even though that's only 3, because we've only had 15 actionable, that's above our norm. Normally we average 20% over the last 109 weeks. And we've had weeks as low as 4%, and I'm not sure what the highest week we ever had. I think it might have been 25 or 26%, somewhere in that area, but it's averaged out to be 20. Now, those are the Logic 247 alerts. Those come at you around the clock, 24/7. Now, when you go to this page right here, Emini Futures Trading. .com, EminiFuturesTrading.com. This page really defines everything that we offer. You know, we've talked 1,000 times about how 9 out of 10 new traders fail outside of our walls. That's a fact. The statistics are a little bit different inside the walls of CFRN. And somebody keeps dinging my phone. All right, but when I say everything, well, think about it. What does a trader need? Well, the first thing a trader needs, and most traders don't even realize this, is they need somebody to teach them how to trade. Imagine trying to tackle any endeavor, flying a plane, brain surgery, even building a house. You could have a plot of land, and every 2x4, every bit of copper pipe, every nail, every screw, every joist, you could have everything it takes to build a house, and here you are on a piece of pristine land. But would you build a house? Even if you were an accomplished builder, would you just start sawing boards and nailing stuff? No, you wouldn't. Now, if you don't know how to build, of course, you need somebody to teach you how to build, but even one who knows how to build needs some kind of plan. I mean, what sort of a house is it we're building here? So that's where our 24/20 blueprint comes in, because it really maps out everything a trader needs to go from 1 to 20 contracts over a period of 24 months. We have the live training room every day. You just saw Michael give a 2-hour recap of everything that happened during the 2 hours this morning. As a member, you have access to one-on-one mentoring. So you have group training 2 hours a day, 5 days a week, plus as much unlimited one-on-one mentoring as you need. A lot of new traders will book 2 sessions, their first week and maybe even their second week, and then maybe it becomes 1 a week. And the point is that you know that there's always help there. When you need help, there's help. Now the Logic 247, that channel opens for business Sunday night at 6 p.m. Eastern. Stays open around the clock until Friday afternoon at 5 p.m. Eastern. So that channel is live and working the entire week. The markets do take a break for 1 hour each day. Monday afternoon, markets shut down on a typical week at 5 p.m. And then 6 p.m. Eastern begins the new session. So today being Tuesday, when the markets close this afternoon at 5 p.m. Eastern, when they reopen at 6 p.m. Eastern, that will officially begin the Wednesday session. Okay. Tim says the worst week ever was a 34% stop out rate within the last 2 years. Boy, that was a rough week. Okay, thanks, Tim. Okay, Valerie, I just got your message. Thank you very much. Is there a 4 o'clock ahead of that, Valerie? Or is that the only one?
Yes, there is a 4.
Okay. Alrighty then. Okay. All right. So here's where you go to get started. EminiFuturesTrading.com. Our methodology, our indicators, the around-the-clock alerts. Really, everything you could possibly need. And now, for a limited time, you can become a CFRN passport holder for just $97 a week. Never offered it before on a weekly basis, but I've had so many requests over the years because $5,000 may be a little much for someone to, come up off the hip with all at one time. Although we do offer a way for you to become a lifetime passport holder with no money down and no payment or interest for 6 months. But others, this $97 a week allows you to get in, really find out everything we do, how we operate, what principles, our strategy, our very simple strategy, the principles used, the way markets work, and then at whatever point you decide that you want to upgrade to a lifetime membership, of course you can do that. Now the $97 a week is not a payment plan. No, think of it more like rent. You're renting it until you're ready to buy it, and then you can upgrade, and then you don't ever have to pay us anything else ever again. Okay? Never before offered, and don't know how long it will be offered, but today you can lock it in, $97 a week. The markets we trade are the S&P 500 and the Dow and the Russell and the NQ, crude, gold, euros, soybeans, even others, some currencies. The strategy and methodology we teach you while we train you on a range chart in the morning, which is a fast chart because we want to show you as many trading opportunities as we can during the course of a session. But if you fancy yourself a 5-minute trader or 30-minute trader, an hourly trader, a daily trader, or maybe even like the tick charts with a fib number, our methodology, our strategy is fluid across all markets and all time frames. So wherever you are on the blue marble, from New York to London to Tokyo to Sydney, and all spots in between, when you're sleeping, we're working. When we're working, you may be sleeping. But the CFRN Emini method never sleeps. As long as the markets are open, the markets are monitored, and we're looking for opportunity as it presents itself. That's how an alert gets into the channel, because opportunity has presented itself somewhere in some market, and you're the first one to get the heads up. Now, we talk a lot about 2 points a day. Everyone, I think, in the trading industry would agree that, man, if you could just get 2 points a day, build the number of contracts that you trade with your profits over time, you could kind of write your own ticket. It's a true story. They talk about it, but do they actually do it? Better yet, do they actually teach you how to do it? You just finished watching Michael do it for 2 hours, okay? And that's using a fast time frame. Again, once you learn the strategy and the methodology, then you'll figure out what time frame is going to be best for you. You can't change the past no matter how much time and treasure you've spent. That is the past. And you've got to separate yourself from the past, and you cannot let the past dictate your future, okay? If you're going to get any kind of different results, you're going to have to do something different. You may have reached the point where you just kind of feel like giving up on yourself. Too many new traders, 9 out of 10, make the mistake of trying to become the perfect trader. Now, most traders, especially the new ones, the idea that they hold in their head of perfect trading would mean, well, then I don't get stopped out. I only put on profitable trades. I can save you a lot of time and a lot of treasure by telling you that that just doesn't exist. It's kind of like looking for a black cat in the dark that doesn't exist. You just can't find what doesn't exist. And it's a really difficult hunt because all these websites that you come across, they tell you something that you later learn just kind of isn't true. And you just have to mark it up to, they got me again, and then you move on to the next shiny object. You're going to have to slow down. You're going to have to realize that getting stopped out is as much a part of trading as breathing is a part of life. Every professional trader in the world gets stopped out. Every profitable trader gets stopped out. Okay? Now, of course, as we're trying to learn something, whether it's to fly a plane or build a house or do brain surgery, we want to learn from someone who's already learned the craft, someone who understands where the potholes are, the slippery slopes. So here's where it gets odd. We know this is a fact. Ask one. We know this is a fact. Ask one. So where does all that money go? New traders exhaust themselves and their cash trying to do the exact opposite of what professional and profitable traders do. They try to find some way, some magic trick, some slick indicator, magical or mystical oscillator that will prevent them from ever knowing the agony of being stopped out again. Well, you know what? It just doesn't exist. But trust me, they'll let you keep looking for it. They'll let you keep paying for it. Here's what has to happen. You have to accept with your heart. You got to write this on the tablet of your heart. There is no easy. There is no magic. There are parlor tricks. There are illusions out there. But you already know we're chasing those, have gotten you. So you have to make up your mind that you've had enough of the gimmicks, enough of the gurus, all that stuff. And you need to learn what professional traders learn. The ones who get stopped out and don't even blink. Because they know it's a part of trading. Part and parcel. Okay? So you have to get over that hang up of being stopped out. Otherwise, you will get burned again. Now, not saying our method or strategy is easy. There is no easy in the world of trading. But there is simple. And that's exactly what we do, is we help you find simple. Kind of like taking an open book test in high school or college. The kind where you get the test, and you don't know the answer, they actually let you look it up in the book. As Michael is teaching you day in and day out how to put on and take off trades based on our strategy, I'm in the background handing out these alerts that go right along with the markets wherever we're at, live in real time. So that what you just learned in the classroom, you now have an opportunity to employ, to put to work, a living, breathing example as it happens. What a wonderful heads up to know that there's a potential long trade coming on the S&P as an example, and where the high probability entry is, where the initial target is, and where the second and third target is, and where the final trade to target is. Some might say that's priceless. But actually there is a price. It's just $97 a week. And if you want to get started, all you got to do is click that button. Okay? Now, as long as you're on the weekly mode, you still get everything that we offer. The weekly trading zones, the Concierge Trade Alerts, the Logic 247 alerts, everything you see on this page. All yours. And you can get started today. Okay? Emini Futures Trading.com. You can cancel anytime. All we ask for is a 3-day heads up that you want to cancel, because we don't want to bill you if you don't want to be billed. And when you're ready to upgrade to a full lifetime membership, all you got to do is call Valerie at 949-42 Emini, or send her an email, support@cfrn.net. Now let's take a look at the Concierge Trade Alerts from last night. We actually have 2 days worth because I put them out Sunday night as well. Now here's Sunday. We're looking to be long the S&P 3460, short 3377, and then if you want to grab a screenshot of last night's, we'll run through those real quick. Long at 3462, short at 3406. The way to deal with these, because the concierge don't come out around the clock like the Logic 247. These come out as a static report shortly after the Globex open each evening, and that's sort of your sentiment for the session. Anything in between these two numbers is the market trying to make up its mind. But at 62 and above, we're looking to be long or look for long trades. And at 3406, we want to be short or looking for short trades. S&P, Dow, Russell, Crude, NQ, 10-year notes. I didn't include the 10-year notes. They were closed until this morning. And I didn't do the Canadian dollar, the euro, the British pound. Silver I did do. And yes, we covered gold. All right. So we'll take a look at last night's. Let's go to our daily chart and get an idea of where we're at. Big picture. Okay. Now, the number that we're headed for down below, I'm looking at 33 33.13. 33.13. Stick this over here as a bit of a reminder. Come on. It's pretty close, 33.13. So what we've had happen, this bullish cross that took place way back in July, it's given us a leg at a retracement, a leg at a retracement, and then a big leg up to that area. Now it spiked it, but this little rectangle came from us using the Fibonacci price extension tool, because when you have nothing to look left for guidance, now you got to break out the old school math, and by old school I'm talking 14th century. So as we were coming down, here was the Thursday session, and then here was Friday. We had talked in the workshop on Thursday night about a potential bounce up to the 50% reverse fib and a potential drop to the 38% fib retracement from this low to this high. So now we got a little double bottom going on right here at this area of support at the 38% fib. Now the low of this move down is 33.37 1/4. So from 33.37 to 33.13. Those are big picture daily chart numbers that we want to pay attention to. So now we'll go over here and look at the S&P on a 30-minute. Okay. Now, all right, I guess John just rang in. All right, so we'll talk to John for a minute, and then I'll finish the recap, guys. Hey, John, you're muted on your end. Hey, John.
Hello.
Yeah, welcome to the show.
Hi. Yeah, thanks. I just want to point out, you know, when I was looking for that rally on Friday, we did get the rally that I was kind of looking for before we turned south. And to be honest with you, the severity of the selling, you know, kind of late in the day, and also the way we opened on Sunday night was a bit of a shocker. In the sense that, you know, this has been a pretty brutal sell-off so far. And the, you know, we had a couple of rallies during the double, you know, the two, you know, yeah, during yesterday evening, but, you know, we kind of never got back positive, and generally, except for the Dow did go positive, but, you know, go from sort of, 150, 200 to down to where we are today is not too good. Now, the interesting development was, it was a very volatile opening, but we basically, and I was kind of thinking of, I think it was August the 24th, 2015, we actually opened down 1,000 points that day, and we came roaring back, and we haven't done that quite as dramatically yet, but it was a pretty strong rebound from the open for a lot of stocks. And, you know, what's kind of interesting is most of the FANGs, they didn't make, you know, except for maybe Facebook and Google, are above Friday's lows. And I would consider that to be a positive. Now, we rallied back up a couple 100 points, 200 or 300 points on the NASDAQ, and came down. We've come down in the three-way formation, and we're trying to figure out whether we're going to go higher from here or lower at the moment. So not a very good structure to rally from, but I wouldn't rule out, this rally gaining steam, or alternatively possibly having one more test of the lows into this session. We've seen this before, 1:30, 2 o'clock. Sometimes we had some extreme tests followed by a big reversal. That doesn't look like the case at the moment. We're sort of creeping higher, which is kind of constructive. I think if we can get back anywhere close to positive on the Nasdaq today, even within 100 or 2 of the high, of unchanged, that would be impressive enough. If we go positive, it would be very impressive. Probably have a very fast rebound during the week. So that's what's at stake. The metals are actually, they did come down kind of the way I expected. They seemed reluctant to sell off dramatically like the last time, and they actually put in a very good low this morning. Which anytime you see the metals and gold and the market going up together, it's usually constructive. And they're right on the highs right now, and they are generally turning around. The gold stocks also opened lower this morning and have potentially put in the bottom. So if you could put the weekly up, Dwayne, on the gold, I think you'll see a development that looks interesting. Yeah, I mean, we've had a series of consolidations and pullbacks, and each one has been exceeded on the upside. And compared to the previous pullback, which we had in March, and the mini pullback we had in June, May, June, the market has been relentlessly higher, and this pullback is kind of, it's shaping out to be quite constructive. It's kind of a triangular pattern, and it looks like we're going to potentially break out on the upside of this, possibly rally very dramatically, maybe my rally up to 2,700. So I would keep that in mind. And it's a similar picture with the silver. You can see how we could break out above 30 and really go on a very big run. Obviously we got a bit of resistance to get above 30, but if that were to happen, you could see this thing taking quite a move to the upside, at least to 35, possibly even higher than that, 37, maybe even into the 40s or 50s. So, right now, I mean, the fact that we haven't broken down from this formation, even though it's potentially set up to do so, you have to acknowledge it and realize that we've had a very powerful move up to this point. And generally speaking, when you, as we pointed out before, when you ran up to 1900, each monthly high was, once it was taken out, tended to go substantially higher. And if you look at the monthly, actually, you can put the monthly up.
Sure.
Yeah, so you can see how getting above 28 might be the beginning of that. Mm-hmm. You can see how when the last time you see these monthlies, we had a monthly pause and then it really surged right up to 50. We're only a little bit behind that point price-wise to where we were before. So, breaking out above this is probably going to be a pretty big deal. And on a we've had a very similar, interestingly, we've had a very similar advance. It was from the 18 $18 silver to this point. It was a bit higher than last time. Maybe that gives us a clue that we may not get all the way to 250 because it's starting from a lower point. but we could certainly get a good ways, maybe up into the 40s, or we could completely exceed it this time. So that's what I would be thinking. And in a way, this consolidation is a little bit narrower than the previous one. If we look at the gold on the monthly, we might get some insight into that too.
There you go.
Yeah. So we had several of them. Yeah, there is I agree. But remember, we're dealing with a very powerful market here, and just on the weekly, it's looking a bit more constructive. Just the fact that it hasn't broken down yet, it's had every opportunity to break down.
Right.
Kind of makes me cautious about being too bearish on this, and that's been proven by the way it's rallying today. So, if everything falls apart in the next few days, maybe that'll change. So obviously, I would consider today's lows now of gold and silver to be super critical, because if they get taken out, then all the gold stocks go down probably lower, and it would be definitely more of a correction. So that's kind of the way I see it. Could you put up Roku or OKU?
Yeah.
Very strong up move this morning. It got upgraded to 215. I think that certainly got the buyers right from the get-go. And it's if you look on the daily, it looks pretty impressive. Even though we've been hit pretty hard today and we're still getting hit, at some point this market is likely to turn, and it's probably going to go back and test the highs, either exceed them or double top or something close.
Mm-hmm.
So whether that happens in this week or this month is determined by what's going to happen, later today and the rest of the week. But it's probably going to happen, going into the election, unless something really disastrous occurs. So there is an outside chance that the highs are in, and that this is a very, I certainly was. There's a sort of like we talked about a week or two ago, where we reached a kind of a inflection point that was similar in time to what happened after the rally in 1929. And one of the things that, they never tell you in advance is when the top is in, and you get a very severe break, which came out of nowhere. It's a real eye opener, and everybody's kind of starting to doubt, whether this, they're obviously having some second thoughts this morning. And the people who got out of Tesla at the top, we had the 2,500 as a target, the equivalent of that being 500. We've hit that. We've come down. We're not down to. Probably back to about 1,500. So we're not down to that 14 or 1,600. So it's not inconceivable we could rally back up to 2,000 or the 400. Maybe retest it at 500 even, but you just have to sort of play it by ear. Now, one of the other things that I think caused this sell-off, maybe they knew about it before it became news, but this SoftBank super bet, they allegedly bought $10 billion worth of call options and with a kind of power behind the final blow-off. Now they're saying they may have lost several $1 billion. They may not have. Nobody knows for sure. But they're sort of saying, I guess the smart money is saying that the last few percent on the upside, maybe the 5%, was undeserved. It was sort of artificially created. It's kind of blow off top. So that's probably the thinking behind a lot of the selling going on overnight, going into today. And the other, it's kind of reminiscent because this guy is Stanley Druckenmiller, who's one of the greatest investors of all time, sort of did the same thing back in 2000 when he was with Soros he kind of couldn't stand it because he was not long, and he saw everybody was winning, and he ended up plunging $3 billion into the market right at the top. And it's sort of a similar scenario that created the top potentially. So, I guess when somebody comes in, if you come in with 10 billion or, 3 times as much today, 10 billion, and you have, you start selling up at the top, because if the guy's betting 10 billion, he's got to get out. So maybe he recouped 7 billion, maybe he got more, we don't know for sure, but obviously that kind of buying power which pushed the market up probably pushed the market down as well. That's exactly where we are right now. So it's as it's starting to look more like we're going to come down and test. Unless we hold right about here, it's very tricky. It's a very volatile market today, so you have to have your wits about you. And even the metals are coming off a little bit from the highs here. So if you were long, I'd probably be exiting them right now, just to stand back and see how they're going to develop from here on. Because one of the things about the metals so far is we have had a number of rallies, $9-10 in gold, $12, this sort of thing, even 20, and then they've tended to drop down again. So it's not exactly setting the world on fire today, but it's certainly a tradable rally, put it that way, so far.
Yeah, no, there's been a lot of opportunity this morning, no doubt about it.
Yeah, now the other thing is, this is something I've been developing over time, that, almost every turning point we get, we put in what I call a reasonable quality buy or sell, and maybe sometimes an exceptionally good quality buy or sell. So the last, this morning's rally obviously created a very good bottom. However, it was met with an equally bad sell signal. We had a secondary sell. Now we're on a third. We had a little bit of a buy a while ago, and now we're on a third sell. So this sell that we're on right now is very, very important, because if it continues lower, then we're probably definitely going to go down and test the mid-morning low, possibly even the low of the day. And if we hold the mid-morning low and then recover from there, that would be constructive. So we're just going to have to wait and see which one of those, or these 3 options, is going to actually happen. But right now, we've seen this kind of heaviness come in around. And by the way, I think I did say on Friday I thought we'd rally at about 2:30, which we did, sort of right on the money, exactly at 2:30 when the market took off, rallied up to about 3:15, 3:20, and then sort of turned down after that. And it was really, the way we kind of peaked about half an hour or 20 minutes before the close, or into the close, and started selling off after hours. It's the first time we'd seen that happen for a while, and we found out on Sunday night, that we've basically been under pressure since then, and today we're under a lot of pressure. So that's the story.
Okay. All right, John.
All right, thanks. Have a good afternoon. Bye-bye.
Thanks, you too. All right, bye-bye. All right, guys, back to the S&P. Well, might as well talk about gold while we're here. We had an alert to be short 1928, and the swing low took us down to 1912.4. So if we were rounded up to 1913, that's 15 points at $100 a point. That's $1,500 per contract traded. Now the long side, as you'll recall, I said the idea with the concierge, because this report comes to you once, beginning of the session, but the numbers are good for the entire session. Okay, important to remember. So you need to maybe print these out, put them beside your keyboard, or just go in and put the lines in the sand. Okay. The long side hasn't triggered. If 1951 triggers, then of course our sentiment goes from being sideways to lower to sideways to higher. Okay. Now, if you have any questions, put them in the chat box, and we'll be happy to answer them for you. Back on the S&P, the alert was to sell 34.06. We dropped 69 points. At 70 points, at $50 a point, that's $3,500 per contract traded. However, getting out of the swing low is difficult to do since we don't know it's a swing low or swing high until after the fact. With the step line here, this is your guide. Okay, once price crosses, once the step line crosses over red and falling, on a short trade, you're looking for the first green candle that closes above, and that price is 33. See this green candle? It closes above, let me open it up. It closes above the step line. 33.73. 33. Let's just call it 74. Round it up. Keep it simple. Okay. So 74. It'd be 25, 26, and 6. That would be 32. Okay. So from the entry to the exit signal, right there, 34.06 to the closing price at 33.74. Yeah, that's right. I don't know why it doesn't seem right, but it is right. Closing price 74. Let's try, so that's, yeah, 32. Exit signal made 32 points available. And that would be not that red candle I had pointed at, but the green one. Okay, so on a short trade, once the step line has crossed over red and falling, and that's what you want when you're in a short trade, is you want to stay on the left side. You want price to stay on the left side of red and falling. When the move starts to run out of steam, it'll walk sideways, then the first green candle close. Now we actually continued lower after the exit signal. Occasionally that happens, but for the most part, that's usually the beginning of the move back up to the BBC. So, you know, whether you lucked out at the swing low, which is, again, hard to do except by accident, or here at the exit signal, 30 points, $50 a point, $1,500 per contract traded. Okay, so that's the S&P. Now that was the short side of the S&P. The long side, the line in the sand that you would have put in last night, would have been 34.62. Just in case there's a rally in store that maybe comes into play this afternoon. Doesn't look like it from here. From here, the high probability move is up to the BBC, where we find some resistance. And once we find that resistance, that should be good for another leg to the downside. Now the only problem is you're going to have an obstacle in your path. Now coming down, you see how price is on the left side of red and falling? That's not the case anymore. Red and falling is now below price, and so that changes the dynamic. So if we popped up right now and then immediately started creating a red candle, would that be shortable? Yes. However, even if this were to stay red and flat, I mean, if price continues to rise, this red and sideways is going to become blue and climbing. Okay, whichever way that part shakes out, we hit the BBC, we find resistance, we get a move to the downside. This area down here, you've got to anticipate that that's going to be good support. Just as we anticipate resistance here, we anticipate support here. Which reminds me, back on Friday it was, we watched the market creep higher. And I'll get rid of that for now. Okay, and I put a chart out. In fact, let me show you what that chart looked like at the time it happened, so you have a real good idea of how important it is that you learn this simple little part of the strategy. Let's see if I can find it. There it is. There it is. Okay, now I can show it to you. So on Friday afternoon, I posted potential resistance at the bearish cross. You see here where red and falling got below the BBC. That's what we call a bearish cross. When blue gets above the BBC, we become bullish, below bearish. Bullish, bearish. Now, that intersection right there creates what we call an important price in an important area. So I posted this chart. I said as price rises, we may potentially have resistance, a high probability that we'll find resistance right there. And so this is, of course, Pacific time, 11:59 a.m. And I came back at 12:41 p.m. Roughly 40-50 minutes later, and here's where price, see, price is just, I mean, this is a big bull green candle. Nobody's given even a second thought to whether or not price is going to get back up to this previous area of resistance. But you and I know a little something that not everybody knows. That area I was pointing at, this is what happened when price got there. Okay? Kinda like that. You can't know the future, but you can know the next high probability move. And there is a difference. Okay? And it continued to trade lower. It got back below the BBC. It got back below blue and climbing. And then that took us into the weekend. And then this was just, if you're not hooked up to the discussion group, you need to get a hold of Valerie and get hooked up, because you'll find a lot of information in there. There's discussion, there's charts, there's discussion about the trades that are underway, all of that. And you have access to that as a member, so make sure you get connected. So now, what happened last night, price pulled up to the BBC. We expected it to find resistance, which it did, which gave us a leg to the downside, but it gave us a leg right into support. 33.96, I'm sure you all remember that number, because that was an all-time historic high for a while. Okay, and we're waiting and waiting to break that number, which we finally did. So now when price pulls back to the BBC, this time we get on top of it. Okay, and once we're on top of it, now we anticipate higher prices. Of course, these are last week's zones. The new zones go out to the members every Monday morning at 6:15 a.m. Eastern. We've been publishing them since December 14th of 2009. There have been a few occasions where they didn't get out on time, and this was one of those mornings, so my apologies. But Valerie was standing by and she got them out, and I appreciate that very much. So, back over here, we're waiting for price Now the question might be, well, if you think price is going to go to the BBC so that you can then short it, why not just go long up to the BBC? It's a great question. That's a counter trend trade. In other words, trend is down. This retracement, this pullback is counter trend. Now, counter trend trades are perfectly legitimate trades. Some people love them the best. They specialize in them. We don't. Everything that we put in the alert channel, the thing that has allowed us to, over the last 110 weeks, publish over 5,000 individual alerts, and to only be stopped out on 20% of those, is very much in part to do with the fact that the trades that go in the channel are always trend trades. Okay? So that requires some patience, some discipline, the ability to keep your hand off the mouse, let price do its thing, let it find the resistance, let it start building that red leg to the downside, and now you got something. And you have the wind of the trend at your back. So let's go now to the Dow. Okay. On the Dow, last night's alert was to be short 27825. And just like on the S&P, price trying to pull its way back up to that BBC, which would put us above the trigger, which would give us another opportunity to be short. 27825. Exit signal on this one. See the step lines on the right side of red and falling. So the closing price of that candle right there, 27668. 27668. Exit price. Okay. And doing a little fast math. 27825 minus 27668. It's 157 points. The Dow pays $5 a point. So that's $785 per contract traded. Now that's from the entry to the exit signal. $785 per contract trade. Per contracting. Yeah. Okay. Now, think about this. If you only took one trade last night, and it happened to be the Dow, and you entered at the published entry price, and then you exited when the market told you this move's running out of steam. Okay? You get the move, get the sideways walk, and then you get that green close above the step line. And there you have it. So from entry to the exit signal, I call that a signal instead of a price. Exit signal. Well, that pays for almost an entire, almost 2 months of passport service. That's one trade. That's one trade. Let's not forget about this one trade. The exit signal gave us 32 points. 32 points at $50 a point. That's $1,750 per contract traded. $1,750 per contract traded from the entry to the exit signal. 97 bucks a week. That's just too much. But hey, you asked, we delivered. Okay. Now, on the Russell, consider being short 1519, which will be right here. Okay, now the Russell, a little ahead of the game. S&P and Dow still trying to pull back to the BBC. Price always reverts to the mean, and the mean in our case just happens to be green. So, sell 1519. And we hit that zone below at 98.99. So that's, you know, a 20 plus point move. If you held out, that was almost an exit signal, but that was. So that'd be 4 points at $50 a point. Worst case scenario, from the entry all the way back around to the exit signal. In other words, you chose not to take, you know, profit. You got price walking sideways. But the idea behind the exit signal is the first green close above the step line. So being very conservative. 4 points, $50 a point, $200 per contract traded. Now when you start trading with us, you hit the ground running. You're in the simulator, you're in the demo account. You're trading our strategy from day one, but you're trading it in the simulator. You're trading it in your demo account. Our 2420 blueprint wants you to put together 10 consecutive days in a row in sim where you reach your goal in 10 trades or less before you go live and start trading real money. That's just good business sense, okay? You've thrown away enough money, you've burned up enough time and treasure, blown up enough accounts. Now's an opportunity to do something different, okay? And part of that doing something different is proving to yourself that you do understand the methodology, you do understand the strategy. You are now seeing the markets in a logical manner, in a manner you've never really seen them before. Logically. Okay. So, you have to determine what your next step will be. If you continue to do the same thing, you'll continue to get the same results. You got to figure out what you're going to do from here. Now, the next high probability move will be to the downside. Okay, got a nice big green candle. We anticipate resistance here. If we don't get resistance here, then we've got this zone from last week sitting right overhead. And then the big one, the major resistance, if we should get that high, okay, right here where the bearish cross took place. I just showed you on that S&P how important that dynamic is. When you have a bullish or bearish cross that leads to a significant move, and this was certainly a significant move, as price works its way back, if it can get through the BBC, if it can get through the WTZ, then you're looking at this bearish cross. And here comes our red candle here, on target, or on time. Now let's see what's going to happen. Got a brand new 30-minute candle. So now, as price comes back down through the trigger, the thing you have to be careful of is we do have an old weekly zone below us, and we've got blue and climbing. So the amount of time that we consolidate here will change this dynamic, and this blue and climbing may climb even higher. Okay? And the long side for the Russell was 1559. Okay. Way up here. Is it possible the market could stage an incredible reversal, just turn on a dime and head higher? It's possible. You have to embrace all the possibilities. Okay, NQ. NQ still in a bit of a slump. The alert last night for the NQ was to be short 11,421. Now price tried to get back to the trigger. Tried to give us a second trigger, but it didn't quite make it. Sell 11421. Now all of this bullish activity stemmed from the Wall Street Open. Okay, last night when London opened, things were pretty quiet until we triggered, and that took us down to a swing low here at 1117. Exit signal way up here. See, that's a little unusual, you know, for to see that strong of a move up above, you know. But closing price 11,294. $11,294. Exit signal. And so 11421 minus 11294. It's 127 points. The NQ pays $20 a point. It's $2,540 per contract traded from the entry to the exit signal. Obviously there was a lot more in the trade. Now you don't have to wait for the exit signal. I mean, you can take your profit anywhere along the way, you know, but if you're waiting for the exit signal, then that's what you do. And so on all of these, we see that there was still, you know, some pretty good profit left in the trade, even though you didn't get out of the swing high or swing low. And our methodology and our strategy really has nothing to do about, you know, buying the top or selling the bottom. That's a very, very expensive game, and I call it a game because that's what it is. It's not something one can do reliably, okay, or consistently. What you need to learn is something that can be repeated over and over again and again. Okay. All right, let's go to crude. Crude, the alert was to sell 38.50. And well, we actually have an exit signal right here. 36.97. All right. So 38.50, the published entry, minus the price the chart told us to get out, That's $1,530 per contract traded. 153 ticks at $10 a tick. It's $1,500 per contract traded. So for $97 a week, you could have had this trade, or you could have had that trade. I just showed you could have had that trade. And then there's that trade. And then we've also got that trade. And there's that trade. I think if you added them all together, that would probably cover your next year of weekly rental. However, after a couple of weeks and understanding how things really work, to be smart to save money, you're most likely going to want to upgrade to a lifetime passport. And you can do that at any time. All you have to do in the interim is just go right here to Emini Futures Trading.com. Everything you need to know is on this page. You can get signed up, and you can be trading with us tonight when Globex opens. Good word for the day. We were talking about hope last week. And today we're going to talk about something a little different. I can get my notes up. Regeneration, there it is. Everyone who believes that Jesus is the Christ is born of God. After Adam sinned, we read that he fathered a child in his own likeness. Genesis 5:3. So God created us in his own image, and then Adam fathered a child in his own likeness. Ever since, we've all been born in the image of fallen men. Now, sometimes people say, he's just like his father. Or we say, my dad was an angry man, now I've got his temper. Dad couldn't stay with mom, now I'm going through a divorce. Dad was an alcoholic, now look at me drinking and drugging. Dad was a workaholic, now I work 16 hours a day. Dad wasn't affectionate with us kids. Now I don't even know how to hug my children. History, my friend, repeats itself over and over again in our lives. Some might call it a generational curse. You can call it, I guess, anything you want. But you've seen it in your own family. You know exactly what I'm talking about. Here's an example. In Genesis 20, verse 2, Abraham said of Sarah, his wife, she is my sister. And Abimelech, king of Gerar, sent and took Sarah. Note, Isaac wasn't even born when his father lied and did this, yet years later, he did exactly the same thing, and he did it in exactly the same place. Genesis 26:7. maybe there is something to this genetics business after all. But there's good news. When you receive Jesus as your Savior, He breaks that cycle. When you're born again, John 3:3, you get a new father and a new nature. You don't need to walk in the likeness of your earthly father anymore. For now you can walk in the likeness of your heavenly Father and become more like Him every day. Why don't you talk to Him today about joining His family? That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.